Good morning. SBA 504 versus 7A. Which is better for your business or investment? So, when it comes to financing commercial real estate or business expansion, two SBA loan programs stand out: the SBA 504 loan and the 7A loan. Both are backed by the Small Business Administration or SBA, but they serve different purposes and offer unique advantages depending on your goals. So, what are the key differences between an SBA 504 and a 7A loan? Well, SBA 504 is designed for fixed assets like commercial real estate, land, equipment, that kind of thing. Uh, Provides long term fixed rate financing for a shorter term. Typical structure is 50% for the conventional lender and 40% for the CDC, and then 10% comes from the borrower, is kind of their formula. Loan amounts can reach a 5.5 million unless you use a pari passu structure. Best for business owners buying or building a facility. It's SBA 7A loan, which is the most flexible one, easiest to use. Flexible, well, easy for SBA. Flexible use for real estate, working capital, equipment, business acquisition, or debt refinancing, all at the same time. Generally offers variable rates tied to prime. Tied to prime. Requires 10 to 20% down payment depending on the use and if you're a startup. Loan amounts go up to 5 million, but a little higher with pari passu. Best for business acquisitions, renovations, or mixed use projects. Pros and cons. So SBA 504 pros: low down payment, 10%. More fixed rate stability. Great for long term CRE ownership. SBA 504 cons: it's a limited flexibility, so it's mostly just for real estate and equipment. It requires CDC approval, which really lengthens the process. SBA 7A pros don't need a CDC approval. Highly flexible use of funds, faster approval turn times, and can combine multiple financing needs into one loan. So SBA 7A cons. It's often variable interest rates every quarter. Higher fees in some cases, although they're pretty consistent between the two, is my take. Slightly higher down payment compared to a 504. So for construction renovations, we look for 15% equity. But which loan is better for you is the next question. So choose SBA 504 if you're acquiring or constructing commercial real estate you plan to own long term. Choose SBA 7A if you need broader flexibility, whether acquiring a business, funding working capital, or financing a property with value add plans. Restaurant construction is great for this. Both loans can be game changers for business owners and CRE investors. And the right choice depends on your goals, project type, and financial strategy. So here's the next step. Before making a decision, consult with a commercial mortgage broker who specializes in SBA financing to tailor a loan strategy that maximizes your return. That is all for today. Have a good day.